I'm Judy Shaw for What's the Fund. Joining me today is Dennis Alff. He is Portfolio Manager with Vaughan. Dennis, it's great to see you. Thanks for joining me.
Thanks for having me on.
A quick note to our viewers, this interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. Dennis, tell me, what's the fund you want to talk about today?
Yeah, today we're going to talk about the Natixis Vaughan Mid-Cap ETF, ticker VNMC.
Wonderful. Okay, so tell me about VNMC and the strategy behind it.
The Natixis Vaughan Mid-Cap ETF is actually a new investment vehicle designed to mimic the Vaughan Mid-Cap Mutual Fund, which was started a little over 12 years ago back in 2008. The strategy looks to take fundamentally driven positions where we think we can earn a 50% return over a 3-year investment horizon. The way we go about doing that is we will only look for 3 types of situations in the marketplace. When we look at an investment, it's got to fit into one of these 3 buckets for us to be interested. So the first thing that we look for are for companies that can take their cash flow and reinvest that cash flow back into themselves to drive organic growth at better and better rates of return. We're big believers around here of the simple concept that if you can find a business that's becoming more profitable as it grows, that can serve as a real catalyst to drive the stock prices up. The second thing that we'll look for are businesses whose actual assets are trading at substantial discounts to their actual worth. It's kind of that classic dollar bills for 50 cents approach. And then finally, the third type of situation that we're interested in are companies that pay high and stable dividends, where that dividend yield is what's going to drive the majority of our return. What we have found over time is by focusing on these kind of 3 types of investment situations, is that we can build very robust portfolios that generate alpha in lots of different economic environments, both good and bad. And that's a really important dynamic, because what that dynamic allows is for our investors to hold the strategy through full market cycles. It takes away that need for an investor to tactically trade in and out of us, which we think is an extremely difficult thing for most investors to do. The other thing about the strategy that's important to note is it's one where we maintain a very high active share. And what that means is we're very willing to look different than the market in the benchmark. And it's just a simple idea, right? In order to beat the market, you have to look different than the market, right? And so we are willing to take outsized positions where we're going to base those positions, though, on our conviction and our research and our due diligence. And it's important to remember when we put all of those names together in the portfolio that we look to ensure that we are properly diversified and that the portfolio mirrors all of the factors that we find in the marketplace, and that we're going to surround that portfolio with some amazing risk management tools to make sure that's the case. And that's important for our investors, because at the end of the day, the alpha that this portfolio generates, that the strategy generates, is designed to come from stock selection, as opposed to making factor bets or sector bets. This is a strategy that's really built around stock selection and stock picking.
Okay, now Dennis, where should our viewers go to learn more about this fund?
Yeah, there's a lot of information that's out there. The best places probably would just be the Natixis Investment Manager's website, or you could simply just reach out to your Natixis relationship manager. They'll have more information than you could possibly need.
Dennis, thanks for joining me on What's the Fund?
Hey, I really appreciate it. Thanks for the time.